and welcome to the annual Investor Meet 2013. Now, firstly, thank you for being here. I know this is a little early in the morning, and I also know that it is not exactly the venue that you have been coming every year, except I think we had it in the same venue last year. But nevertheless, it's good to see all of you here. I think before we get started, one of the areas of interest that I'm sure you will have is the announcement that you have read this morning, where Unilever has announced, Unilever PLC has launched a voluntary open offer to the shareholders of Hindustan Unilever Limited to increase the promoter stake to 75%. This will, of course, not affect the listed status of the company. Since HUL is an independent entity with respect to this offer, I certainly have no other information, and we have no further information that has already been, except what has been stated in the public announcement, which I'm sure you have read, and it's in the news. Therefore, I have no further information on this, and the proceedings of the day, therefore, will continue to focus really on our results and give you a sense of HUL, what's behind the results that we have had, and then I just thought I'll make this clear upfront, so we don't spend too much time later in the afternoon in terms of the Q&As, because there is no further information beyond what you have read and seen in the press release. Okay, so with that, and I think there is a little bit of an echo here. No? Is this better? Is this, is this better? Okay, I think let's get started. So what I want to do is to give you a little bit of a context of Unilever and Unilever's approach and strategy towards the developing and emerging markets. Starting really with where Unilever is in terms of what we call becoming fit to win, and I'll come back to what that exactly means. Talk a little bit about the developing and emerging market opportunity, none of which is, of course, unfamiliar to all of you here, and then talk about what Unilever's strategy is in terms of developing and emerging markets, and that will set up pretty much for Nitin to come and talk specifically about Hindustan Unilever. So, first thing, in 2009, we went public in terms of our vision for the business, which is to double our business and at the same time reduce our environmental impact by half and increase our social impact. And this was really called the Unilever Sustainable Living Plan. It's a growth strategy, a strategy that says we must grow our business, but at the same time do so responsibly. Since then, you can see that we have made enormous progress. In the last years, we've actually added 11 billion euros of turnover. And that has been added as a consequence of a combination of organic growth, a little bit of acquisition, and of course some currency effect. But I'll give you a sense of the underlying performance of the business, and that will tell you that we are in a very different space than where we were, say, pre-2009. In fact, our growth has been fairly consistent and on the upward momentum, 3.5, 4.1%, 6.5, and last year we ended with 6.9%. March quarter results you've seen for Unilever, it's at 4.9%, but that like for like, quite frankly, is close to 6 because of the leap year last year and so on. Equally, our growth has been competitive. We've been growing ahead of the market, and on the aggregate, Unilever has actually been gaining share, which we were not doing pre-2009. We are also beginning to move up our core operating margin, which last year grew by 30 basis points, and it was flat in the previous 2 years. This is an area that we are focusing on this year. How do we make sure that our gross margins go up? We are now pretty much top of the league table or the pack of our peer group in terms of growth, but we are in the middle of the group in terms of our core operating margin, and gross margin particularly is an area of sharp focus for us. Equally, like I said, we are trying to make sure that not only do we grow consistently, competitively and profitably, but we also have a responsible agenda in terms of our USLP. And you are familiar, I think some of you at least are familiar with what our USLP targets are, which is that we want to improve the livelihoods, improve the lives of 1 billion new consumers in the area of hygiene and nutrition led through our brands. We want to make sure that 100% of our raw materials are sourced from sustainable sources, agricultural raw materials by 2020. And at the same time, we want to make sure that we reduce our environmental impact by half. So that's 1 billion, reducing environmental impact by half, and 100% sourcing of agricultural raw materials from sustainable sources. So that's pretty much our report card in a nutshell. Now, what do we mean by becoming fit to win? What we said was that between 2009 and 12, we were really trying to make our company be capable of competing in the marketplace, to ensure that not only were we growing, but we were able to grow competitively. As we move forward, we really want to make sure that we adopt what we call a 4G plan, which is all about consistent growth, competitive growth, profitable growth, and responsible growth. In other words, we want to make sure that we are able to get into a rhythm of consistently delivering top and bottom line expansion. So that's now our agenda going forward. Now, we feel confident that our strategy is working. And there are really pretty much a few pillars of our strategy which are as part of what we call our compass strategic thrust. The first is strong in-market execution. You'll hear a lot about this from Nitin when he talks about what we are doing in India. But globally, we have launched a program last couple of years of Perfect Stores, which is a mind shift of moving away from just supplying products to retailers to really marketing our brands to shoppers. So the whole approach is that everyone in the business, whether you happen to be in sales or marketing, are actually marketing our brands. Some are marketing to consumers, some are marketing to shoppers. So this has really lifted our execution and sales fundamentals in the marketplace. You'll hear a lot about that. The second big pillar of our performance has been bigger, better, and faster innovations. Till a few years ago, as a global company, we had less than 10 projects that were going into 10 plus countries at the same time. Only less than 10 projects globally. The innovation projects that went across the world in more than 10 countries. Now, we have nearly 100 projects, global innovation projects, that are being launched in 10 plus more countries. Now we are actually leveraging our global scale. In fact, this one example of Axe Apollo, where we have launched a global campaign and a new variant called Axe Apollo, where the prize really is to send people into space. And this is a global program. 60 countries in 3 months. And this is just but one example of some exciting innovations ranging from the Dove range of hair care to Tresemme, and several examples of what we are now doing in terms of bigger, better, and faster. The third pillar of our strategy at the end is that product is hero. And we have invested substantially globally and in India in terms of improving the product quality. 95% of our products now either win or at parity with, in a blind test with our key competitors. So if I have to, I've picked out 3 that I believe have been game changers. Strong in market execution, bigger, better, faster innovations, and improved product quality. And this is really giving us the confidence that our strategy is working. But this is also underpinned with a really important part of our agenda, which is what I call business unusual on costs. So the first bit that I showed you was business as usual on growth. And this is business unusual on costs. In the last 3 years, we have actually taken out savings of upwards of 3 billion euros in our supply chain. We have tried to make sure that we have discipline in terms of return on our marketing investments. Last year we spent 6.5 billion euros globally in terms of advertising and promotion. It's a very large item. And we said we must apply the same rigor to this as we would apply to any of our other investments. Equally, what we are doing is ensuring that every activity system of ours, whether it is overheads, supply chain costs, our marketing investments, gets a fair return and is optimally utilized. All this has ensured that we have significantly dropped our company overheads. We are at a record saving in terms of return on marketing investments, and our supply chain savings, like I said, have exceeded in the last 3 years well above 3 billion euros. I can tell you that Hindustan Unilever is an excellent example of each of these, and again you will get a flavor of what we've done here. In fact, in Hindustan Unilever, our overheads costs are amongst the lowest in the world. And the last bit of our strategy, business as usual on growth, business as usual on costs, and at the heart of our strategy is that USLP, Unilever Sustainable Living Plan, is an integral part of our business model. It is driving our growth. Classic example is Lifebuoy, where we are running one of the world's biggest hand washing programs. It's a brand with a social mission, and as a consequence, it's also one of our fastest growing brands globally. Equally, by ensuring that we are focused on around sustainability, we have had in the last 4 years 300 million savings just in terms of waste reduction, waste and cost reduction in our factories. Now this is really important because often people ask me, and I'm sure some of you will ask me again this afternoon, that is there a cost to being sustainable? And my point of view is that there is an investment behind being sustainable, but at the end of the day, less has to be more. If you use less resources, it has to be better. It has to be more profitable. It has to be more good for the business. And at the same time, the last bit is about managing risk. We live in a world which is transparent, and you have to make sure that the reputation of the company is intact. And in that world, we have to be responsible. And we believe that by actually embracing sustainability proactively, it will actually help us as a business. So, USLP is driving innovation, USLP is driving costs, and USLP is actually helping us manage our risks. So, those are the 3 elements of our strategy: business as usual on growth, business as usual on costs, and USLP at the heart of our business driver. Now, closer home. One of the key drivers of our growth, one of our main drivers of our growth, if I may say so, not key drivers of our growth, has been the emerging markets. For the last 8 quarters, we have shown, consecutive 8 quarters, we have actually shown double-digit growth in developing and emerging markets. This is one of the better performances amongst any of our peer group. Developing markets now account for 57% of our total turnover. Developing markets are a majority of Unilever's turnover now and account for bulk of Unilever's growth. I don't have to say anymore why this is important. Also, let me tell you that historically, we have actually had a growth rate in our developing and emerging markets last 20 years, ranging between 8 and 9%. So we have a fantastic track record, and in the last 2 years, we've actually ratcheted that up to a double-digit performance. Now, that tees this up nicely in terms of, therefore, what the whole opportunity in the emerging markets is and what is it that Unilever wishes to do going forward.